Hello everyone, welcome to my channel Eco Mystery. Hope everyone is fine and safe. So, as we know that in the previous class we have discussed about the journal entry, what are the rules that we have to consider while posting the journal entries, and before considering the rules we have to identify the account first, and then only we can you know apply that rules. And we have practiced some more basic questions. So the agenda of today class is only to discuss and practice more complex questions, so that you are able to enhance your understanding about the journal entries. Because once you are able to understand about the journal entries, then it is very easy to prepare our books of accounts and prepare the ledger and trial balance. So it's very basic and necessary concept for you to go further with the accounting. So first of all, we'll just try to learn about the summary of the journal entry. As we know that we have a three types of account. First is personal account, second is real account, third is nominal account. So under the personal account, it is related to the personal name or the organization of organization, like any Ram account, Sita account. So whenever in the accounts any particular name or particular associate organization name will come, so it pertains to the personal account. And what rule we have for the personal account: debit the receiver, credit the giver. It means whenever you are receiving something from someone, so whoever is giving something, it's a giver, and whoever receiving something, it's a receiver, right? Second is real account. It always pertains to the asset or whatever the property that a particular organization or the owner that has, like any machinery, plant, equipment, computer, laptop, right? So for the real account, the rule we have: debit what's coming, credit what goes out. It means whatever the asset or property coming into the business, it should be debited, and whatever the asset is going out from the business, it should be credited, right? Third is nominal account. It always related to the expenses, revenue, losses, gain that you have. Debit all the expenses and losses, and credit all the income and the gains. It means whenever you are incurring any losses or incur your any expenditure related to the business, it should be debited, right? And whenever any income you have earned or any gain you have earned, that you should have credited in your books of accounts. All right, so let's try to solve these examples, right? So for this also we have to prepare the accounting entries only. Harsha started business with cash of rupees 2 lakhs. It means Harsha has started her business, all right. And to start her business, what she did, she introduced some cash in her business. And how much cash she has introduced? 2 lakhs, right? So we also solved some same type of the question in the previous class. It means Harsha has introduced the capital in the business, right? So cash is a real account because it is an asset for the business. And if cash is a real account, what is the rule we have to apply? Think about it. Debit what's coming, credit what goes out. So what is coming into the business? Cash. So cash should be debited. And Harsha's capital, because Harsha introducing her capital into the business. First of all, Harsha's capital is a personal account, right? And for the personal account, we have a rule: debit the receiver, credit the giver, right? So from the business point of view, who is giver? Like from where the business is receiving the cash? From the Harsha. So Harsha is a giver, so it should be credited. So to Harsha capital account credit by 2 lakhs, right? Next point is purchase goods from Naman for cash of rupees 40,000. So what Harsha did, she purchased some goods of rupees 40,000 from supplier naming Naman on a cash basis. It means goods come into the business and cash goes out, right? This is the base of the transaction. So goods is the inventory because she purchased good to further sale, right? So inventory and cash both are the asset, and if they both are the asset, so it is a part of the real account. And if it is a part of the real account, so what rule we have to apply? Debit what's come in, credit what goes out. So what is coming into the business? Goods, inventory, right? Inventory account debit. And what other thing goes out from the business? Cash. To cash account credit, right? Next is sold goods to Bhanu costing rupees 10,000 for 12,000. So what she did, she has some goods which she purchased for 10,000, but instead of the 10,000 she is able to sold at a profit. So she sold the goods to customer for the 12,000, right? So but here it is not mentioned that she has sold the goods on a cash basis, so we have assumed that she has not received the cash yet. So who is the credit, who's, so since she sold the goods on a credit basis, to whom she has sold the goods, to Bhanu, right? So Bhanu is the debtor, because you have to receive the money, you have the right to receive the cash from the Bhanu, and Bhanu is a debtor and also a asset for you, right? So and but Bhanu is a personal account because it relates to the particular person name, right? So he is a receiver because he received the goods, so Bhanu account debit. And you have made the sale, so sale is revenue, and revenue is your nominal account, right? So what we learned in the nominal account, credit all the income, so revenue is your income, so it should be credited, right? Bought furniture on credit of rupees 7,000. So you have bought some furniture for your business, right? But you have not made the payment, so it means it is your liability, that because you are under obligation to make a payment, right? So furniture, it's furniture is an asset, so it is a real account, so here we have to apply the real account. So furniture is coming into the business, it should be debited, right? But to whom we have to make a payment, it is a creditor for us because it is a liability, hence it relates to the personal account, and whoever has given the furniture on the credit basis, it is a giver for us, right? So to sundry creditor. Next question is, Kunal started business with the cash. So it is the same question as similar to the previous one. So cash has introduced, Kunal has introduced some capital into the business. So cash account debit to capital account credit. He purchased furniture for cash. In the similar manner, furniture is coming into the business and cash is going out from the business. So both are the real account, and you can apply the real account, furniture account debit to cash. So here it is a mistake because he has purchased the furniture for cash basis, so ideally to cash account should come, not a sundry creditor, right? Make a note of this, please. Third point is he paid commission. So commission is an expense, so nominal account will come here. Nominal account rule we have to apply. Commission account debit to cash, because we are paying the cash is an asset and it is going out from the business, so we have to credit it, right? He purchases goods on credit. So Kunal has purchased some goods on the credit for which they have not released the payment yet. So goods is, it's an inventory, so it is an asset and it's real account. So what is coming into the business? Inventory. But what is going out from the business? Nothing. So it's our liability to release the payment to sundry creditor, right? Next, this might be you feel very complicated. So cash paid to Rohit in full settlement. So Mohit has incurred some sort of transaction for which it means they have not paid yet to Rohit, they have to make a payment. So now in the first point they are saying that Mohit has released the full settlement payment of around 48,500. It means cash is going out from the business and cash is a real account, so we have to credit, right? And who are receiving the money? Rohit. So Rohit is a personal account. Who are the receiver here? Rohit account debit. Cash received from Manish. So Mohit has received 20,000 from Manish, right? So in the business, what we have received? Cash. Cash should be debited. And who is the giver? Manish. And Manish is a personal account, so he is a giver. So cash account debit to Manish. Rent paid. So Mohit has paid the rent. So it means when so they have used the paid, it means they have cleared the payment. So rent is your expense, it come under the nominal account, so debit all the expenses and losses, rent account debit. And what is going out from the business? Cash. Rent account debit to cash. Cash withdraw for the personal use. So Rohit has withdraw some cash from the capital account, right? So it means what is going out from the business? Tell me. Cash is going out from the business, so cash should be credited and capital account will be reduced because whenever Mohit will introduce some capital, it will be a part of capital account. But now from the capital account, he is withdrawing something, right? So capital account, right? And even he is the receiver. You can think from that point of view also, because Mohit is a personal account, right? And who is the receiver here? Rohit. So that capital account should be debited. All right. He has purchased car for the personal use. So because he has purchased some car for his personal use, so for that we will not post any journal entry. It will not impact the business anyway. Okay. He has received some commission in advance of rupees 2000. Commission received, it is his income, so it come under nominal account. It should be credited as per the rule, right? And he received the cash also, cash account debit to commission received. Salary outstanding, it means salary is an expense, but he has not paid yet. So salary has come under the nominal account and should be debited, but since they have not paid yet, it is a liability, so he has to be put a credit of as a salary payable, right? Prepaid insurance, is also a expense, but here he made the expense earlier, so it is a prepaid insurance and it is a asset for him, because like he has made the payment in advance, for which they can avail the service later on also, so it is an asset. Here we have to apply the rule of real account only. So prepaid insurance should be debited, and for prepaid insurance we have to make a payment. That's why we can say that it is a prepaid, because we make the payment in advance. So in cash should be credited, right? Received interest, so Mohit has received the interest of 700. Interest is your income, it come under the nominal account and it should be credited, right? But for receiving the interest, some cash should also be credited in your bank statement. It means you receive the cash is coming into the business, so it should be debited, right? Goods destroyed by the fire, so Mohit has some goods which was lost due to fire, right? It means it is an expense, it is a loss for Mohit, right? It's come under nominal account, so we have to debit that loss because it is a loss or expense, right? And goods have been reduced because it was destroyed, so we can say loss by fire to inventory account, right? Next one, it might be little more complicated to the previous example. Bobby opened a consulting firm. So Bobby is a person who are running a consulting firm, and he has incurred this sort of the below mentioned transactions. First of all, what Bobby did, he has invested 4 lakh as a cash, and also in the office agreement with rupees 1.5 lakh in a business called Bobby Consulting. So it means cash or office equipment is coming into the business because both are the assets, so they should be debited to capital account by 5,50,000. Alright. Next is, he has purchased land and small office building. Okay, the land was worth by 1.5 lakh and the building worth 3.5. So land and building is coming into the business. It come under real account because both are the assets. It should be debited, right? The purchase price was paid with rupees 2 lakh cash. So for entire 5 lakh we have paid 2 lakh cash. So 2 lakh cash is going out from the business, it should be credited. And a long term note payable for 3 lakh, it means out of the 5 lakh he has paid 2 lakh and rest they will be paid in a long term. They have not paid yet, so rest is a liability by considering as either as sundry creditors or a liability. Bobby transferred title of motor car to the business. The motor car was worth 90,000. It means earlier Bobby had have a motor car which they have transferred now to the business for the business purpose. It means in the business motor car is coming. It is an asset for the business. It come under the real account, so it should be debited, right? To credit should be given to the capital account because Bobby has given. He is the giver, right? Purchase for rupees 30,000 additional office equipment on credit. Bobby has purchased some additional office equipment on the credit basis for which they have not released the payment. It means office equipment is coming into the business, and from whosoever supplier he has purchased that, he has allowed the credit period, so he is the giver. So so we can put as a sundry creditor, or that person name we should credit in the credit side. All right. Paid rupees 7,500 salary to the office manager. It means ideally should be 75,000. I think there is a typo mistake here. So salary is an expense. We already paid that. So salary expense to cash, because cash is going out from the business and salary expense come under the nominal account. So we should debit it. Provided services to a client and collected 30,000. So your income, it is your income, and income should be credited, and you receive the cash account debit to income. Purchase new office equipment by paying 93,000 cash and trading in old equipment. It means you have purchased a new equipment. For that 93,000 you have released in a cash, and for the rest payment you have provided a equipment, old equipment, right? So it is a sort of exchange transaction. So what is going out from the business? Cash and office equipment. Total amount is 1 lakh. So what is coming into the business? New equipment. So new equipment by 1 lakh, and to old equipment and to cash, right? Completed service of client for rupees 26,000. This amount to be paid within 30 days. It means Bobby has provided a service to one of the client for which they will receive 26,000. So it is a revenue for them, it should be credited, but they have not received yet. They will receive the money within 30 days. Like, they have not received the payment now, so it is a debtor for them. So debtor is a real debt, is a personal account, and it should be because the debtor is receiving the services, it should be debited. All right. Receive 19,000 payment from the client in the previous related to the previous transaction. So now out of the 26,000, Bobby has received the 19,000 from the client. So receive the cash in the bank account. From the business point of view, cash account debit and debtor will reduce, right, because he is a giver now. So 19,000 cash account debit to debtor account credit by 19,000. I'm repeating again, always first of all you need to identify the type of account. After that you have to apply the rule, because it is very helpful for you to post a journal entry, and through this way you will never do a mistake, right? I'll recommend you to practice more and more questions. It's help you to enhance your understanding about the journal entries, because once you have a hand on the journal entries, then it's very easy to prepare the ledgers and the trial balance.